US stocks ended near the session's highs on Thursday, as inflation data helped raise expectations for the Federal Reserve to take a modest approach next week with its first interest rate cut in 4 years. The European Central Bank delivered a fully expected rate cut, dropping its deposit rate by 25 basis points to 3.5%. The ECB lowered its 2024 growth forecast to 0.8%, down slightly from an earlier projection of 0.9%, citing weaker contribution from domestic demand over the next few quarters. Gold prices climbed to a fresh record high $2,583.60 per ounce on Thursday, with inflation data this week providing support. The US PPI rose 0.2% last month, the government said Thursday, compared with estimates for 0.1% growth. Asian stocks are poised to end the week on a strong footing on Friday, spurred on by another solid rise on Wall Street the day before. China is poised to cut interest rates on more than $5 trillion of outstanding mortgages as early as this month. Consumer inflation in India accelerated faster than expected to 3.65% in August, near a 5-year low, from 3.54% in the previous month as food inflation quickened to 5.66%. Inflation remained below 4%, the midpoint of RBI's 2 to 6% inflation target range, for the second straight month. India's industrial output grew at a faster pace in July compared to a month ago, led by electricity. The index of industrial production grew 4.8% in July, as compared to a revised estimate of 4.7% in June. Nifty registered a fresh all-time high of 25,433 on 11th September, by soaring 1.89% or 470 points, to close at 25,388. By surpassing the previous swing high of 25,333, Nifty has negated the bearish implication of the engulfing candlestick pattern formed on the week ended 6 September 2024. Next resistance for Nifty is seen at 25,525, which happens to be Fibonacci extension levels derived from recent swings in the index. Support for the index has shifted up at 25130.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.